Hey there, investors. Welcome to another episode of my podcast where Joe Edgar, the founder of Tenant Cloud and owner of thousands of rental units, talks with me about creative strategies he used to get started in real estate investing. He actually ran into a bunch of problems where he actually bought his first investment property as a minor and then caused some tax problems for his father. And he explains a little bit of how he got out of that and some creative strategies regarding real estate, purchasing real estate as well. He actually started out with creative financing strategies. And obviously, as a minor, he had to get his father involved with it. Now, I also talk about my journey as well, kind of relate the story. We talk about house hacking. We talk about live-in flips. We talk about a lot of that beginning journey stuff in order to get to that end result. And then we also throw in some tidbits into why tax advantages are actually the most powerful reason for real estate. And actually for millionaires like him, he's a multi-millionaire, why it's like the only reason you get into real estate at that point. And we go into a lot of that, a lot of in-depth strategies. And of course, we talk about property management software itself and why you need it, but also just kind of like the different intricacies of, using a property management software in order to avoid tax problems. You will run into tax problems a lot of times not using it that you may not have foreseen. And then some legal liabilities, some of the issues with tenants texting your phone. This might sound a little bit weird, but them doing that actually creates a liability problem for you. So we get into it in this podcast. Let's go ahead and check it out with Joe now. Hello, everyone. Welcome to another episode of this Devin Moreno podcast. And today, actually, I have a special guest, Joe Edgar. He's actually the owner, I believe, and the CEO currently of Tenant Cloud, the software management.
Founder is probably a better word. As we have investors
All
now,
right.
so I won't claim
Founder.
100% any longer.
All right. So, founder of Tenant Cloud. So, for those of you who don't know, on my channel, I've often talked about Tenant Cloud as the property management software that I use to manage my rentals. So, I've been using this product ever since I pretty much got started as an investor, aside from like a little bit of, apartments.com sort of stuff. But yeah, we could go into that kind of the pros and cons of using a software like that or something like Cozy. I know that doesn't exist. They wrapped it into apartments.com, but something like that. A lot of mom and pop landlords are looking for a solution as they continue to scale their business, even from just 1 to 2, 3 rentals. And we're going to talk about that, why I personally would suggest using a property management software. And obviously, Joe's going to have way more experience. And then we're also going to talk about Joe's start in real estate. Because, Joe, from my understanding, we'll have you give a biography on this. You own thousands of rentals at this point, right?
Yes. Yep.
All right. So, in fact, let's go ahead and just talk about a little bit of who you are, like where are you at currently and sort of where did you start? Just a little bit of a detail on that.
Yeah. I mean, currently, to be honest, I don't know. I think it's been a couple of years, but last I heard it was like 7,000 doors. So it's a much larger beast than me. And my wife sits on the board, and I don't have a lot to do with it on the day to day any longer. And so now I went into tech, but where it was, I grew up in a large family, one of 13, and a very poor family. We grew up in Chiloquin, Oregon. It's a southern part of Oregon on a reservation, Klamath Indian. I'm not native, but that's where my father got a job swinging a hammer. So he was a contractor, built houses, and my mother was a janitor. And so when you have 13 kids, you are the labor force. So I grew up from a very small age, at the bottom of the rung, it was like you pick up all the boards and you have to put them in a pile, follow my brothers around and sweep all the dust and then pull out nails. And slowly you get a little older and you're climbing on the walls. And next thing you know, climbing on top of the trusses and putting in roofing. So I have done, everything from building to cleaning. A number of houses. And so my first piece of real estate to step into my own, I was 14. And so my parents
owning it at 14.
Now in Oregon, you can't legally own a property at 14. So I had saved up $3,000 and I'd convinced my father to put his name on it. And I'd bought a house on an owner carry. And I know this is going to sound crazy. But it is the values at the time because median home price in this country is something like 465,000 right now. So I bought my first house for $10,000 and I put $3,000 down on the reservation. To be honest, I bet it doesn't sell for much more than that now. they carried the note, the owner did, so I had to pay them. My
Mhm.
first payment was going to be due in 60 days. So it basically gave me 60 days to try to make all the repairs to this, house that had just demolished. I mean, one of the holes in the walls were big enough you could almost drive a car through. There was no foundation. I mean, the roof was caving in. So it is, now that same house might sell for like 50,000 just to give a sense of, inflation in there, but it was pretty bad. And so I spent every waking hour and night, fixing up this house. And to afford it cost me about $10,000 in supplies. And I borrowed that from a local hardware store, just convincing them that I'm good for it. And it's a small enough town that, everyone knows everyone. They're like, okay, well, we know your family's industrious and doing construction. So luckily I had that. And after 60 days, I sold it for 45,000. So it tells you also,
Okay.
how limited the profits there.
Yeah.
And in the 45,000, I took enough to pay off my supplies and get my down payment back and do it again. And
But
so
you
that
learned a
was my
valuable
first one.
lesson there.
Yeah, and so I carried the note on it. So I still had, quite a bit. And that note carried on for 20 something years, giving me something like $95 a month for the remainder of those years. And so that was my first one. That was really my first one to passive income. There's definitely pros and cons in that. The cons are, I didn't own it. And so I didn't buy my first one that I owned until right when I turned 18. I bought a duplex, but I bought quite a few under my father's name. And I'll explain how that actually led into Tenant Cloud. But the the cons and I guess pro mix is capital gains. I didn't know about capital gains.
Yeah.
And so that was an eye opener for me. I ended up creating quite a tax problem for my parents uh, that I had to get quite inventive, and that ended up evolving into a tax strategy of itself.
Mm.
And I know they've changed a few laws and how they do it now, but it can still be carried forward. And one of those is I started buying houses and selling them for less than I bought them, and then changing the terms.
Mm.
And I ended up taking a tax loss and no capital gains at the end. And so how that works
Okay.
is you find a house and you have to find someone who would do an owner carry. And this market, people are starting to consider this. I talk with
Yeah.
a lot of people and they're starting to look at it now. Whereas
Yep.
even 10 years ago, those were just gone. It's
Yeah.
like when banks are flush with cash, you can't get anybody doing owner carry. It's like just get a loan. And so when interest rates go up, then you can start to find people like, well, I just won't budge on my price. So I'm willing to carry the note.
Yeah.
And so, but back in the 90s, latter 90s, owner carries were still fairly common, especially in small rural areas. I mean, they were something that could be done. And a lot of retirees were looking for, constant cash flow. So they were reasonable. So you'd make a deal and you say, okay, I'll give you $3,000 down and I'll buy it from you for whatever your price is, but work with me on terms. And then when you sell it, I ask for that same amount down, actually for less, but I changed the terms.
Mm.
And so on paper, I took a $3,000 loss, which is a tax loss.
Yep.
Um, and so as a capital loss, however, you look at those terms and as they go, I made sure to extend my terms farther out. And so to give you an example, I had one, my loan paid off in 10 years. And then the buyer who I sold it to, it didn't pay off for 5 years. And a house, I don't remember exactly, but it was around the $60,000 mark in those days. And that ended up netting me like $15,000,
Wow.
in one day. So you
Very
see how
good.
those small differences, they add up. And so the real thing I got into was learning that compound interest is a very valuable thing.
Yeah.
It is the growth rate in so many things. And so really understanding how that rate works is very important. Understanding the rate of which you're going to get into a deal, and the rate you must get out of the deal is more important than the actual price that you're going to pay for the real estate itself. And so that ended up becoming a whole growth strategy. And I stopped fixing them up at that point. I would
Mm.
do 4 or 5 of these a month and just buy them and sell them as a fixer upper, and I would carry the note. And it's called carry the note. I don't
Yeah.
know if that's a term still anymore. Okay, good.
No, no, it is actually. Yes. Yeah. 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 It's very,
Sometimes I'm
very.
like, it's been a while since I've done those. So I don't know what is still floating around here, but you do those. It was really nice because when you carry them, the title company will take care of everything for you. So you sell it, you work with the title company, they'll collect the note, they'll send out the coupons to the payer, and a lot of it's electronic now payments, and then it goes through them. They pay who your note holder is. So the owner you bought it from, they pay them and then give you the residual. And so property taxes are all escrowed in there and your insurance. And so you do this deal once and then the remainder just checks come. And so the only thing you got to balance is in those strategies is you have to make sure to have a cushion that in case who you sold it to, they don't pay, you are making sure to cover that and, move forward.
And that's
to kind of reclaim some of those.
We actually talk a lot of creative, we call it creative finance collectively. I think now you're probably noticing, I'm not sure if you know Pace Morby, he's sort of a person who, okay, well, there are certain real estate investors. YouTube has become an explosive force as far as bringing a lot of new investors in the market. And so these creative strategies are starting to be brought up quite a bit. I imagine that would be a little bit
That's a great term for it, creative strategies. Creative financing, that is the best way to describe it.
Yeah, basically. I mean, a lot of the people on my channel know that I had to get a start doing a lot of this. I did, subject to seller financing. I talk about that. House hacking, if you're referring to a term like that, which is it's not really creative, but it just depends on how you use it, and they can become very creative. But long story short, innovations and all that. Yeah, a lot of viewers on my channel know that because I started with no money, I had to get really elaborate on how I accomplished this because, it sounds like your parents taught you, entrepreneurship in a sense from a very young age, whereas, I imagine many watching my podcast, that's just not a thing, like even understanding any more than going to college, get a job sort of strategy. But
I mean, that is definitely true. I would add to that I grew up in a very poor town. And so I've been asked that question before, and I'd say that everybody in that town is a hustler.
Yeah,
they're all entrepreneurs.
Yeah, there's no jobs, so
right. It's not because they're a gifted talent. It's a necessity. It's a survival mode.
Yeah,
and so that tells you that everybody has the ability to be an entrepreneur. Now there are what I classify as two separate types of entrepreneurs. And so both my parents were lifestyle entrepreneurs. And so, everybody created something to support the lifestyle.
Yeah.
And the other type of entrepreneur that I really had to learn and understand more was expansionary or a growth entrepreneur. And the difference is a lifestyle entrepreneur is one where if you leave your business will die.
Yeah.
And a scale entrepreneur is building a business of which you are not needed. And that's really a harder thing to do. You have to build it to where if you step away, it is a life of its own. And that's how it scales. And so I had to learn that piece later on in life. But yeah, the basics of entrepreneur skills, I definitely, was taught. Now you talked about where you started nothing. Did you start with your own residential home, or did you start with kind of looking at passive income? And then focusing on your own residential home?
So I actually was not interested in investing at all until the age of 28. It wasn't really taught by my family, and stocks were the only thing.
That's actually really young, even still. That's really young.
Yes.
Right now.
I am very fortunate.
Girls in my house right now, and both of them talking about how about you just get a job? I mean, it's basic. 28 is pretty young.
It is. And, I am fortunate at least to happen by that age because, yes, I have run into many people where they're much older at this point, just starting. And so several life events ended up pivoting me toward realizing, hey, I can't live paycheck to paycheck. And keep in mind, I made at the time I was making $80K a year. So it was like, okay, for a salary of a household, that's pretty good. For a single young guy, that's a good salary. So the fact that I'm living paycheck to paycheck is kind of a little absurd, but that's unfortunately extremely common amongst, high income earners in the DC area. So basically ended up trying to buy my first house. And that's where I ended up essentially, basically long story short, getting loans. I ended up using private notes to get properties. I ended up learning how to structure deals and financing. And after a series of mistakes, I had to get very, very creative on getting out of these mistakes. Kind of similar, it sounds like, to your story. And though I never did the one that you're talking about, I had less of I made too much money problem and I owe too much and I'm not making enough problems. But
that's always a good problem to have, though. Those are the ones you want. When you have a tax problem, you're doing something right. So.
Exactly. Right. Since then, it's been molding. I mean, now at this point, I'm 100% real estate investor. I actually created a niche brand of my own for rooming houses.
That's
And
great.
that's what I specialize in. That's a majority of my houses at this point. A lot of people on my channel know that's primarily what I talk about. Crazy enough, I actually use the Tenant Cloud product. I know it's not
I love
fitted
it.
for that, but I have used it. I do use it currently for rooming houses,
I love
just
it.
calling rooms units. And
Yeah, yeah, yeah.
yeah,
I love it.
but yeah, so that's, I mean, in a nutshell, that's where I'm at right now. At this point,
Gotcha.
not at several thousands of properties. I'm actually just at
I
22.
know. That's
So
you got to grow it. 22 is big, so
yeah.
there's nothing. I mean, that's huge. So that's a big game.
Yeah,
Uh,
talking about your start, I actually have kind of developed a bit of a theory. A lot of people are being pushed into this narrative of you need to buy houses in order to quit the 9 to 5. But when you do the math on the average single family home, the amount of cash flow that it makes, I find that this is one far harder to do than people are actually giving it credit for, extremely much harder to do. And I find that actually what most entrepreneurs who are teaching real estate, what they do is they actually make their revenue from something else, a business, a high revenue cash flow producing industry, and then funnel that into real estate, either for tax advantage purposes or, to obviously make their money, make money, obviously, and such. I mean, you seem to be shaking your head. Is that something you kind of agree with, that
yeah.
probably just
I
going
mean,
out and buying rentals?
there's different stages, and
Mm,
real estate ends up playing a role in all of them. And it just depends on what
mm,
stage you're at, on how you use
mm,
it. But you
mm,
can think of it just a tool, and like how you're going to use the tool varies. So in the first one, like people ask me all the time, like, how do I get started? And I say, well, don't, how do I get started in rentals? And I said, well, don't do rentals. Get your own house in order.
mm.
That's the key, because some of the best gains are on the earlier phases. And so much that I'm like, I remember those days. It would be great to go back to those. But your own primary house, your residence, you can
Mm.
have the best gain to get your kickoff.
Yep.
And what I mean by that is, I'm sure you're familiar with the primary tax exemption.
Yeah.
And so, 2 of the past 5 years, if you're a married couple, it's $500,000 in gains tax free. And
Mm.
so, one, real estate keeps growing. I mean, the last 2 years is
Yeah.
nobody could have
That's
predicted that. It's just nuts. I can't believe that, we're almost $500,000 median house in this country. It still blows my mind. I mean, but that's really where
mhm,
they should start. Instead of
mhm.
looking for a rental, I know lots of people are still in a rental and looking to get into rentals. So I was like, it's not really a job replacement. Like if
Yes.
you're looking for
Yeah.
it to replace your job, it's much farther down the road
Yeah.
where you have 20 something rentals. Because
Mm,
then you say, okay, well, I have to hire someone, or I'm so good at it, I could actually do this part time and
mm.
do another gig. And that's where I think it fits. But first, it's like, I definitely say figure out your own house. It's really the best place to start. There's so many benefits. Even if you don't know much, like you're not handy at all,
Mm.
at least you can be your own project manager. There's cost savings in there. Just looking at basic supplies and having a house built, or buying a house and having it remodeled and just managing it. That's a great strategy. Some I just talked to another gentleman, and I was like, well, if you just move in it and slowly have just room done at a
Yeah.
time, I was like, it's a little awkward, but you're going to be, so much better off financially in 2 years, just toughing it out for a little while, that it's beyond. And then once you do that first one, that's like your foundation.
Mm.
Then you say, okay, I've now have a little cash pool, and it was tax free, 500,000, all the gain. I can now look at they don't even have to sell that house. It's 2 of the last 5 years, but if you sell it is when you can kick in. You could borrow against it as well. But that's when you now step into the rental world.
Yeah.
And what's great about the next phase of the rental world is it's an income offset. So if you're now just in that, let's say you're making between 85 and $150,000. Well, having a rental is great because there's two things it provides. One is you want to borrow against it, because
Mm.
that interest rate creates what's called an interest rate shield. And so when you borrow money, you can use that capital somewhere else, and the value of the property will still appreciate, but the cap on the amount you borrowed is fixed. But that's also money, that interest that you have on it is deductible.
Mm.
And so the other thing is the depreciation in the improvement. It's not the land, but the building itself. When you get that depreciation, I mean, it's fantastic because it's not actual money that went out of your pocket that year,
Yeah. Mm.
but you get to claim it against your taxes.
Yes.
So that means if you're making that 150 to 80,000, it actually will lower and you'll pay less of a tax. So now again, you've created a program that will help you grow your wealth kind of as you move through those. And so then you start looking at like, all right, I have one, and you're kind of doing the same strategy. Now, I advise people like every 2 years move. And that's what I did in my earlier days. Every
Yeah.
2 years, we fix it.
Yeah.
I built the house physically. The very first one I did everything from mechanical, electrical. And in most states, you're allowed to do it yourself, but you have to live in it for 2 years,
Yeah.
which meets the same tax requirement. But the reason you have to live in it 2 years is you have to guarantee the work.
Yeah. Yeah.
So they're separate reasons, but it's the same time period. So I would do that, and then 6 months before we sell it, I would start building the next one. So by the time we sold it, we moved into the next one, and we did that many times, and it grew a substantial amount of wealth that I then used to buy lots of properties, and that turned into lots of things where we were buying new ones. We even had a new development where we are building new houses, and so there's lots of stuff. But yeah, I don't know where I
No,
digress.
that's
That's how I
that's
started.
actually huge. You actually don't realize how much on target you are with what I talk about on my channel. I actually, so house hacking often is defined as essentially using a primary residency loan to buy an investment property. Now, keep in mind, a lot of people hear that. They're like, wait, that's illegal. No, it's not. You're living in the property. But the
Yeah.
intent of the home is not to be a dream home you live forever in. It's primarily an investment vehicle. And so I did that with my first one. And actually, I continue to move. I actually preach moving like every year or every two. If you were flipping the home, so 2 years for you makes sense. I continue to hold it. So for me,
Gotcha.
I just
Yeah,
keep
yeah, yeah.
bouncing. But using for me, it was the rooming house strategy of renting different rooms. And that's kind of was where I was introduced to it. But you could do this with a lot of things,
Yeah.
multi-unit, four-ply,
I love it.
whatever. There's a lot of different ways to do this. But, that essentially was eliminating the rent, like just eliminating the rent. That is a massive portion, being able to live for free, which for you kind of realized the rent you saved later on. You deferred it in sort of a live and flip fashion, but
Exactly.
essentially same idea, like
Same
just whether it's
exact
long
idea.
term
Yeah.
or right now, huge. And then of course all the tax advantages you mentioned, which uh unfortunately flies over the heads of many people starting out a lot more. The right first, we often talk about real estate makes money in appreciation, cash flow, tax advantages, and principal pay down. But that tax part is the one of the most
It's
overlooked
very big.
ones. It's big
That
and it's very
it
overlooked.
becomes the only reason you're in real estate.
Yeah, exactly. Especially once you get big enough, it's just like, yeah, that's why you buy
That is the
seven.
reason you're
Yeah,
holding it. Exactly. So, and there's some other things that are in there and kind of in that early phase that there's expenses that people forget about, and those are tax advantages. So you do have to be what's called a real estate professional, and
yeah,
that means spending a lot of time in your rentals. But to
yeah,
be honest, most people, even just doing one rental, they do. They stay up
yeah,
late at night wondering if the rent's coming in. They end up taking this call. They do this, they do that. Renting professional or a real estate professional is not someone who is a real estate agent. It
yeah.
means you're spending a lot of time on your rental, and all of them do. If it's every paperwork, it's all that. And then you think of all the things of which normally are not tax deductible. Now you're like, wait a minute, like I I'm researching all about my rental on my computer right now. They're watching this webinar on their computer right now, learning about it. All that
Yeah.
education counts. And so now it's like their computer, their internet, normal things that they would have just had as an expense are actually deductible as part of their real estate business. And so when you add those things in as a real estate professional, you find out some of the expenses they normally couldn't because they didn't have real estate, they now can. Now that segues into why you need a good software, because it does matter in how you account for those.
100%. And actually, I'm glad I actually brought that up. I wanted to talk about uh, it. Well, actually, just to touch on it, the real estate professional. Please, everyone, talk to your CPA to make sure you actually validly have that status before you immediately assume you do. But starting out, I actually, because I did I ended up getting the software pretty quickly, because more
Hmm.
quickly than most, because of the nature of the fact that I have 4, 5, 6 tenants in a single house, which
You're right.
means my
Yeah.
tenant explosion happens very fast.
So 20 units means you got like 200 tenants.
Yeah, exactly. I actually have a lot more tenants than people realize, which is why I don't like to refer to it, because otherwise it sounds like I have like
Uh,
dozens of multi units. But so I ended up getting a software, and it has been tremendously help. In fact, I don't even think I would do it any other way at this point, and mainly for bookkeeping. that's a huge one, like trying to keep up with who's actually paid what, but also maintenance items. Um, you know, if you want, we can go ahead and start off with either, your start, why you founded this company and to begin with, why you even started, or just also the benefits of, the property management software.
Yeah. Yeah. I mean, I'll give a little history. It's back to my parents where I created a problem for them in capital gains.
Mm-hmm.
And, I was 14.
Yeah.
I went to a reservation school, dyslexic. I, accounting was not something I knew about. And my parents were not accountants either. So, little did we know, like you needed to show all of, at the time, we didn't have an accounting software of record. So
Mm.
if you don't have a consistent process for accounting, which is what the IRS looks at, then your default is receipts.
Yeah.
And if you don't have all the receipts and that's your process, then you have nothing to show for it. So,
Yeah.
unfortunately, because I didn't do all that, they showed a sale, but the cost that it took me to fix these up, I didn't have that
Wasn't
proof,
reflected.
and it created a huge capital gains problem because I knew my costs, so I would keep track of them of sorts, but I didn't really organize them all together. And so that's when I did find out that most people are along the same lines as me, that they think like, okay, I just need to keep all the receipts. So most do. I've said this many times in conferences and events, and I usually get a chuckle. So I know it's close to true for everybody, is that when it comes tax time, most people take their 1040 Schedule E and they make it look as close to last year's as possible because the task of actually keeping track of their stuff is so daunting that all of them just lie. And I say that, and this usually where I get a laugh.
It's no, but
And
it's
I
true. It's so
know,
true.
I know from that, like there's so much truth in there, and it's like and it is a daunting task because when you're taking care of a rental, like someone's calling on a pipe that's broken. I ran down, I had to get this pipe, I called the guy, I got the plumber, I had to get this for him, I had to get the tenant, swindled this, and then by the end of it, you're just like so glad it's done. You forgot about the fact that you should keep track of what those costs are. And so that's really where the problem comes in, is that if you didn't keep track of that, then the liability is on you to make sure that you kept track of all of those receipts. If you're going to say, well, I have a credit card, so I can just show it on credit card. Well, you have a problem because
Yeah.
if you use that credit card for anything else, well, now you have to
Whole
justify
new one.
every single one of those
Yeah.
expenses, all of them for everything. And
Yeah.
now you have to prove that you did it. And so otherwise, none of them count. So if you
Yes.
only have credit card stuff, then they're actually useless. So if you only keep receipts, then you do have a drawer full of receipts, and that's at least one method. But now, if there's any receipt of which is not done, so let's say oh, that's right, I did. I bought a garage door, but the guy had it, so I gave him cash. So if you don't have receipts, well, that drawer full of receipts has become your now official process of record. And if you don't have a receipt, can't include it. And so
Mm.
that's when I learned that was the heart of saying, man, there are so many people. There's 15 million DIY landlords out there. And I guarantee 99.9% of them are not professional accountants.
Yeah.
They're professionals at something other than this. And they don't realize that the accounting is the most important part of a real estate strategy. And
Mm.
so that's where we launched Tenant Cloud. It's a free solution. There's, if they want some bigger
Yeah.
things to get it, they can get it, but its core service is free. And
Yeah.
it is to help them be the accounting software of record. And so what it does is it involves a tenant, service professionals, and owners if you're going to manage on behalf of someone else. But those three basic things mean when you move in a tenant, you can screen them, you can find them, do whatever, set up the lease, and boom, it invoices them, charge them late fees, and it goes into the accounting software, and it tracks it for all the correct categories matching your 1040 Schedule E with the IRS.
Mm.
And so then it also matches all the maintenance requests in with the service professionals. And so even if your service professionals are not using Tenant Cloud and don't get leads through Tenant Cloud, you can still account for them in there. And now you actually don't even need receipts so long as you're keeping track of it in there, which it does automatically for things. So now you're more on the worried side of things you don't do inside of Tenant Cloud because everything that's in there, what's nice is when it comes tax time, you can go in and hit a report, and it's the tax report, and you
Mm.
select Schedule E. and it will produce one for you for the whole year, and you were done like that. I mean, every year when I go to do it, I'm just like elated because I was like, just flashbacks of the old days of how long it would take me to go through this. I'm like, oh, I just pressed one button and the whole property is done. This is like amazing. And I hand that off to the accountant, and he has a clean Schedule E that has all the costs, and those are all backed up, in your software that's cloud based.
Mhm.
And so anytime if there was an audit, you have it all done, and that becomes your official accounting software of record. And that's what really
Mhm.
is important. So it's more important than your receipts, it's more important than all your credit card things, because you have to prove that you have a consistent manner of record keeping. And where your rent comes in should be the first one, because that's what the IRS is going to say is that, okay, well, your rent came in, you have late fees. This is indeed where you're keeping track of both money coming in, money going out. So we'll call this, and it's consistent. Okay. And so that's the heart of Tenant Cloud, is really to do the accounting for you. And so
Mhm.
it is designed to be very simple accounting that's automated. So like I said, you set up the lease and it starts doing all the accounting for you for your tenants. If you have a maintenance request that comes from a tenant, you can actually find a local pro, so you can get bids from local pros. Or if you have one you work with, you can just send it to them. And then whenever they're
Mhm.
done, you can pay them right there through the software. So you don't have to write a check or do anything. I mean, now to mail a check is something like 65 cents. So,
Yeah. Yep.
people think like there's no transaction cost. I was like, no, paper checks come with a fee, and you got to write it out, get an envelope, do the whole
Yep.
hassle. So wrap it up, and it's like $1 every time you do it. So if you can just pay them online,
Oh, absolutely.
you
Yeah.
you it's so much easier, so much smoother. And the second you pay them, all you do is like you got it, you paid them, and all the accounting is already backed up and done, and it feeds all the way to your report. So now when it comes tax time, it's like stress free, it's easy, it's all backed up. There's all the information you would ever need, and
Mhm.
it's cloud based forever. So,
And
so
I
yeah, so that's the
actually,
heart of it.
yeah, no, actually, that's fantastic. Funny enough, it has actually saved me from massive tax issues. In the
I
beginning,
love
first 2 years, one of my largest mistakes was not keep commingling. All the stuff normally every new investor does. I had no organization at all toward my receipts and all that. So it was just an absolute nightmare as far as especially come tax time. And yeah, I basically, I can't even lie that I didn't make it up because I'm like, well, I had no
it.
way of like
There's no way,
figuring this
exactly. And you're
out.
not alone. That's most landlords are like, it's impossible.
Yeah, so we did the best we could, but we're just like, all right, well, if this ever comes for an audit, I'll probably owe money. And that's just as simple as
That's
it
exactly what everybody does. They're like, I don't know what else to do, but there's always so much. So
is. Yeah.
just cross my fingers. Then 3 years comes by, like,
As far as the service feature that you had mentioned with as far as tenants, one thing I noticed really quickly was when I got past not even that many tenants, probably like 10, whenever someone submitted a maintenance request, oftentimes new landlords, you do it through text. Okay, so you text and all that. Well, you end up forgetting about it between
yeah.
life and your job and everything that you have going on. You just end up forgetting about it.
Oh,
Cloud has been fantastic for that, plus automated like my HVAC filters, automatically creating requests for that. And so
all right.
it, just and keep in mind, like, I mean, just having a property management software in general, that's why I endorse it. Like, just the
So there's
organization
even
is huge.
there was a bigger reason for putting all that in there. And having as many rentals and going through so many, you could say, like, my daughter just learned to drive, and I said driving's not actually that hard. The hardest part is all the experience, because you only
Yeah.
have a couple of seconds to make a decision. So
Mm.
that's why you have to drive a lot in practice, because you need to have the experience. So I will say there's a lot of experience built into this software, and one of them
Mm.
is, a lot of people don't know, if you let your tenants text you, you have officially made that a conduit for messaging.
Yes.
Soon as you respond, you have officially made it.
Mm.
If you allow them to send you a Facebook message, you have officially allowed that to be a form of communication. If you do it in any of those, as soon as you respond, you've officially made that. And the problem with that is, if any, because when landlord and tenant relationships are great, you don't, they're fantastic. So it's easy to work around, right? There's lots of things. It's when they don't work out so well that you have problems. And so if you take a maintenance request by text, and let's say you do forget about it or you don't manage it, you could be liable for a minimum of a month's free rent in about 20 different states, just from that text alone,
No,
because
that's
they
huge.
messaged you and you didn't do anything about it. And so even worse is the ones where they say, "Hey, I'm moving." And now you're going to dispute the deposit. And it is where that message went and when you responded that the judge will ultimately have to look at and say, well, you get the deposit or you don't. And that's why it's like having all your messages in one place. Never, if a tenant texts you, like the only thing you should respond is say, only message in Tenant Cloud. Because that is a legitimate say, because it makes it official. And so
Yeah.
having a place where you can print out, like, here's all the messaging. Like, if it's not in here, you didn't do it. If you didn't send a maintenance request, if it's not in here, then I didn't get it. If you
Mm.
told me you were moving out early and it's not in here, well, I didn't get it. And so here's the evidence, and both parties have evidence to it. And so the judge is like, oh, well, this is really nice. And that's one of the reasons you can run those reports and do it is there's so many. I mean, in this business, I've heard, I don't know your strategy. I know a lot of people have variations and opinions on this, but earlier on, there was this thing going on where every property should have an LLC, set up all these LLCs.
No.
And okay, good. And I had heard that and I was just like, this sounds complicated. Having been on this side of it, like I never set those up. I do have one LLC and that holds all of them. And, the concerns everybody had, I'm just like, that is a daunting task. Everyone who goes through it, I'm just like, what a tax nightmare. Like, I don't think that's the liability you should worry about. The liability you should worry about is actually the smaller amounts. Those are like, how are you going to claim your deposit? Making sure you get your rent, making sure your late fees are done properly. Those basics are really important, and they come through having one organized place to keep it all. And that's really at the heart of it, is that the liabilities are very basic that people oversee. And that's really what it's about, is those basic things about a maintenance request, showing when you responded. Because, for
Mm.
instance, Illinois, you didn't respond in 3 days, boom. And there's in Texas, if you didn't respond to an air conditioner issue within 24 hours, 3 months rent. So there's just really
Wow.
basic things
Okay,
that
that's
you got to
huge.
do. Like, yeah, air conditioners are a must-have in Texas, so it can't shut down. But in most
Yeah.
states, a refrigerator is the same thing. You could be liable up to $300 in many states for all the food that's in a refrigerator if you don't respond within, I think it's like 48 hours or something like that. I'm forgetting them all, but
And if it's going to your
um,
text messaging, then you may be on vacation.
exactly. There's so many different places that you just don't know that are out there. And what's nice is, to get it, no matter where you are. And the design was like, if you normally do everything, but you are on vacation, and then you get a notification on Tenant Cloud, you're like, oh, I can't do it this time. You always have somebody where you can, like, I'll get a bid. I'll find a service pro that's local. I'll arrange it. Even, all right, this time you have to pay someone because you're traveling, but you do it. Or if you work with someone, you like send it to them, and it gives them all the details. And the other thing about maintenance requests, this is to actually save landlords time. And I don't know, I grew up in construction, so I learned really early that if I watch a video and if I can hear or see the problem, depending on what it is, I can almost always narrow down what's actually going on. And that's because I just had a lot of experience on it. But most landlords go out, and I've had some where it's like, oh, all the electricity is out. You go there, you find out they need to change the bulbs. And that's not a landlord duty.
Yeah.
And so you spend all this time going out there and finding out they should have changed the bulbs, and you had to organize and schedule and do all this stuff. And I've had, the same thing with many things that go on in the house.
Mm.
And so really just having a maintenance request that goes through, video and a picture, I can sift through it and say, oh, that's not what they're saying. Let's before I do anything, let's check and have this done. Like, just those basic things are
Yeah.
designed to save you as a landlord a lot of time. Not to mention, let's say when it is an actual problem, a normal problem takes what? Tenant tells you it's a problem. You're like, let's say your response, you're like, okay, it's 24 hours. Now, if you were to do this normally, like text and email, you're like, oh, I'll find this person, I'll find this person. Now you got to coordinate. Okay,
Yeah.
well, they'll be here this weekend. Okay, I got Frank, he's going to come here. Okay, yes, got the tenant, schedule. Then they don't show up on time. They need to reschedule. And then you got to move this. And then you're like, oh, well, I'll meet them there. And then you're back and forth. Your entire weekend came to fix, like, one
Some
hot water
simple issue.
heater valve or something,
Yeah.
so your entire weekend's gone. And with Tenant Cloud, they can send a maintenance request. You can view it and say, oh, I'll get a bid, or I'll send it to Frank. And
Mm.
then they can message each other, change and schedule whatever. It's all available to you as the landlord to see those messages, whatever they communicate. And so you can always understand what that scheduling issue is. If something did change, was it on our service professionals end, or was it on the tenant's end? Like if the service professional showed up and they didn't get in and they said they would be there, then you're like, listen, I did attempt to fix it. And all of those things, when it comes to court, you need to have all that
Yes.
information
Yeah.
available. But then it saves you so much time, because now you're like, I connected you all, figured out. and you're done. And so the amount of time and just the basic liabilities that are built into there, a lot of people don't fully appreciate. And to have all of those of which are tied in by category to your Schedule E tax form, there's nothing else out there that does that. And that's really the heart of it, is that everything you are doing is making sure to still keep everything organized for tax purposes.
I'll tell you what, I just learned something from that right there. There was one feature in the maintenance section where you kind of pick your categories out. And I tend to be a person who just says, all right, skip that. I'm just going to write what is
what it is. That it is.
Yeah.
Well, it'll help organize, because all those end up in other for tax purposes. But yeah,
that's actually, no, that's perfect. That's huge. Actually,
and we did take, so
like
on the tenant side, we did try to make it, they break down 1,500 different problems with your home with 4 quick selections.
Absolutely.
So you have to pick 4 quick things. That's why I always push it. I was like, have your tenant do it, because the app, it's picture based. There's 6 selections per options. There's 6 of them, but they break it down into 1,500 different problems. And so there's a lot in there, but those are feeding what ultimately ends up in your Schedule E. And so you can change them if you're like, listen, it's not electricity or something, but most of those categories actually, there's only like 11 categories for the IRS. So a lot of them will fit, no matter what. But the ones that are different are capital expenditures. Those are not one that would go into the Schedule E, because you'll depreciate those. And so those are built in there as well. So if you're going to do a roof or something like that, it also helps you say, oh, that's where those are.
Okay. Well, no, I mean, this is, it's anyone who's been watching my channel for a while. They know that I often preach this idea that if you have to do something yourself, or if like every time you actually have to physically go and do something, try to figure out a way to not do that thing. And what you have been talking about is exactly spot on, and how exactly to achieve that. How I was able to, when I had a full-time job, still manage my rentals every single time. If it's just to go there and just open a door, it's like, okay, lockbox, right? Simple thing. But then translating into all this maintenance stuff, everything you just mentioned was gold. And like I said, I can endorse it because I've been using this product for years now at this point. So I definitely appreciate you coming out and talking about this. I mean, as far as any last statement regarding this product and all that before I let you go today?
Product's definitely fun. It's built around how I built, a large portfolio thing. Is I made sure to follow the same principles and built it into software. So continue to do it. I mean, I advise people to do it. And the real estate market is hot right now. So even if you look, interest rates are down a percentage, even though lots of people are talking about interest rates are up. But if you look at those, the median house price is staying flat, and the average house price actually went up, which means we're selling higher end real estate still. So we're still missing about 6 million properties in the market, and those properties that are being built, they're not replacing them. So if you are thinking of getting into real estate, now is a good time. So avoid naysayers that say, something's around the corner. There is too much equity for the amount. So people don't realize, like, in the last 10 years, values have more than quadrupled, but the amount of debt that we all collectively hold against that real estate has only slightly gone up.
Yeah. No,
that's equity. So I mean, it's like, and it's a hard thing to repeat 2008 now. It's a different problem. We're going to have a housing shortage that continues for a while. So real estate's a good thing to own.
I 100% agree. I've been still buying. People ask me, hey, are there no good deals out there? And I'm like, no, I'm still doing this every month. And it's not
a year from now, they're going to be like, I wish you would have bought this. Like, that means you're looking at good deals now.
Yeah,
that's really different.
Exactly.
So, I know everybody now and looking pre 2020 wishes they would have bought just anything for any price. So
Well, I appreciate your time, Joe. And for all of you listening, I hope you see, if you guys want any advice on the Tenant Cloud product, feel free to reach out. Of course, I will assist you with it, but also, of course, reach out to the website, tenantcloud.com.
Find me on Twitter is probably the fast way to get me, but always available. Find me on Twitter.
All right. Sounds good. Then, all right. Well, I'll talk to you all very soon.
Talk to you. Thanks.